50 points away from 14,000, about 200 points away from an all-time high reached back in 2007. If you think that's made Marc Faber less bearish, well, you'd be very wrong. Despite that, Marc is the man behind the gloom, boom, and doom report. He joins me now to talk markets. Good to see you, Marc. Thanks for joining us.
It's my pleasure. Thank you for having me.
So you say regardless of what the markets do near term, a correction is overdue. When do you expect a correction and how significant?
Well, I think it can start any day. We are very overbought, but it is also possible that we have a mild correction in February and then a further increase in stock prices, something that would be similar to '87, where in the first half of the year until August, the market went up by 41%, to lose 40% in 2 months in October, November. So it's a possibility that we have a lot of volatility this year in equity prices. I am selling shares at the present time. I'm reducing positions because there is euphoria building up.
Okay, but why should it go down? Let's talk about some of the fundamentals and what's supporting this market. Number one, the Federal Reserve, easy money, making for very few alternatives to own U.S. stocks. Number two, corporate balance sheets flush with cash to the tune of $3.6 trillion. Number three, an economic landscape that has improved and is continuing to improve in the U.S. Why are you uncomfortable owning stocks?
I love your comments because in 2007, analysts would have said exactly the same. Why would the market go down? The Fed will step in and bail out the system and this and that. Markets move up and down. And we had a lot of volatility in all markets over the last couple of years, and they simply move up and down. And at some point when there is euphoria and everybody is investing, markets move down. Why did bond prices go down?
Yeah.
Since last August, long-term bonds have declined by 10%. Why does the dollar go down?
So you just think it's going to go down because markets go up and down. How about the fact that the PE ratio on a forward-looking basis is only 14? What do you have to say about that?
Well, maybe the earnings estimates are overly optimistic because revenue growth is not there. And there may be some cost pressures coming in, or maybe you can't lay off many more people. Interest rates are bottoming out. So there is a chance that corporate profits will disappoint in 2013. But by the way, there could be also some geopolitical problems. I've just spent a lot of time in the Middle East between Christmas and yesterday, and I can tell you, in my view, it's a boiling pot.
So if not stocks, where then? What's the alternative to owning U.S. stocks? I'm just trying to figure out, got all this money on the sidelines, corporates with all these trillions of dollars on their balance sheets. If they're not going to put their money in stocks, where are they going to put their money?
Well, that's why I said maybe the market first goes up strongly, and that would be a major embarrassment actually for central banks to have a real stock market bubble while unemployment actually doesn't go down and the global economy doesn't grow. That would be really an embarrassment. And then finally a stock market crash of major proportions because they can't cut interest rates any further. Right. Or an embarrassment would be for bond prices to really sell off. In other words, for the market to push up interest rates. The central banks aren't going to push up interest rates, but the market may push it up.
How significant a spike could we see in rates? I mean, a lot of people worry, including yourself, that we could see a fast and furious move in rates, given the fact that, you know, they're at such rock bottom levels. When would you expect that to happen?
Well, basically, the 10-year note yield has already risen substantially, as well as the 30 years. And I think that bond prices remain quite vulnerable. Despite the fact that the economy isn't very strong. Number two, what is an achievement for the US since November is that the stock market is up 12% from the November 2012 lows, but the dollar has managed to weaken by 10% against the euro. This is quite an achievement, to weaken a currency against the euro, which is a sick currency by itself.
Now, you said a moment ago markets go up and down. Dollar goes up and
Yes.
down, stocks go up and down, and yet you
Yes.
also say you will never stop buying gold. So what's behind that strategy? Doesn't gold go up and down too?
You see, I want to tell you something, Maria, about gold. I buy gold because I'm fearful that we will still have a systemic crisis, that we will have wars and so forth and so on. So I'm buying gold because I'm fearful. But I'm sorry to say, Maria, you don't own any gold and you are in great danger because you don't own any gold. So I'm fearful and I own gold, and you are in danger because you don't own any gold.
Well, you don't know that I don't own any gold. Actually, you're right. I don't own it. Okay, guilty as charged. I don't own any gold. Let me get your take on some stocks
The
here.
way I look at you, you're not a gold owner.
I have gold on my ears and on my neck. That's one place I own gold. But let me get your take on...
Yes, and you have a golden personality.
That's it. I like that very much. Thank you, Mark. What about stocks here? Where's the low-hanging fruit in terms of the stocks that are going to lead this decline that you're expecting? You don't like Apple very much, right? Where's the stocks you think that lead this this market lower?
Actually, if I look at global markets, I think Ukrainian stocks are very low. I think Vietnam is inexpensive. I think Chinese stocks are relatively inexpensive. This is all relatively speaking.
So you think I should sell all my U.S. holdings?
Have...
You think I should sell all my U.S. holdings and buy Ukrainian stocks?
Maybe.
Really?
Yes.
Okay. What about stocks in the U.S.? I mean, look, that's a whole nother conversation. I mean, what about the rule of law? What about getting my money in and out easily? I mean, we can have a real conversation about the Ukraine, about Vietnam, about China.
Yes.
You want to go there?
I like the rule of law in the U.S.
But in terms of the stocks in the U.S., yeah, you said Apple. You still pretty bearish on Apple. Yeah, go ahead.
No. I tell you, in the US, what is relatively cheap are mining companies, resource companies. They're not particularly expensive. I think that is a sector I would look at.
Okay. And you think in terms of some stocks that are going to lead the sell-off, what are they? What are the sectors leading this market lower that you're expecting?
Well, I think that, first of all, we had, a year ago, I went to Atlanta and Phoenix and I looked at the property prices in Georgia and in Arizona, and I felt they're very low. And so I wrote about this, and I thought one way to play it is obviously to buy homes there and also to own home building stocks. They had a huge move, and I think they're ahead of the fundamentals. Okay. Number two, so I would essentially be a seller of home builders. Number two, I think that technology is still vulnerable. Okay, we'll leave it there. Mark, great to have you on the program. Thanks so much. Thank you very much. I'm going to be checking out Ukraine, Vietnam, and China in terms of some opportunities. Marc Faber, I hope you'll come back soon. We'll see you soon. Marc Faber joining us, publisher of the Gloom, Boom, and Doom Report. On a tear.